What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL. But the charting and trading method that we use can be implemented with any company that's traded in the US stock market. So make sure you hit that like button if you enjoyed this video. It really helps the channel grow. Thanks to all those who continue to tune in. If you haven't already, make sure you hit that subscribe and notification button as well. That way you're alerted when we release new videos. The nightly videos and the weekend videos that we produce focus mostly on identifying triggers and targets for trades ranging from scalps and intraday trades to long-term swing trades and leaps. So if you want a deeper dive into exactly how we set up our charts and the trading levels and the broadening formations, things of that nature, make sure you check out the bonus content on our YouTube page. There's also a free PDF in the description of this video, which outlines the strat that is the base of our charting and trading method. So make sure you check that out as well if you're not familiar with the strat. So I encourage you to really just hang with us for the whole video because along with the triggers and targets that we give, we also provide some pretty good insight into price action on all different time frames. So with that, let's go ahead and take a look at the agenda for today. We will go ahead and recap the price action from Thursday, December 4th, and then we'll zoom out like we always do to look at the week, month, quarter, and year charts. Make sure we don't get too locked in on those short-term time frames and make sure we know where we're at in the grand scheme of things. Then we will look at the market maker's expected move for Friday, December 5th, as well as zooming back in to set the 4-hour markers or the triggers and targets for Friday, December 5th. And we'll also do a quick review of the triggers and targets for the week, month, quarter, and year. All right, so let's take a look at today's intraday chart on the 5-minute level like we always do. We look at this first because we have a proven and repeatable strategy that we use to essentially get either scalps early in the morning or early entries into longer, more long day trades or even overnight swings with this method. And if you're not familiar with the channel, the method is identifying the opening print or the first traded price of the day, and from watching price action from there, identifying if we move up from the opening print and we pull back a little bit and make a higher low above opening print, at or above opening print, then we look to get into calls. And the targets for those calls are the overnight high and previous high a day if they are above the current level. At the same time, if we are pushing down from the opening print and maybe we push back up for a little bit, but we make a lower high at or below the opening print, then we want to look to get into puts. And we will want to target the overnight low and the previous low a day. All right, so we'll just take a look at how things played out today. Very flat day, so no trend set. It was an inside day, so we didn't even go two up, meaning we didn't go above the previous day's high, and we didn't go two down, meaning we didn't go below the previous day's low. But you can see on the chart here, we've got the previous high day up at the top of the chart, just below last year's 50% level, this white dashed line. And then we've got the overnight high, excuse me, right below the previous high day. Again, this opening print level or the first traded price of the day, the overnight low, and then at the bottom of the chart, the previous low a day, right? So with price action, again, it was, we here at Bullish Chips, if you watched our video yesterday, we had a couple of calls that we swung overnight. So we were not focused so much on entering new trades this morning as much as managing the trades that we were already in. Those calls were expired next Friday. And we can see we opened up, inside the previous day's price action and just below this weekly broadening formation that we see here, this purple line. It is a diagonal line, but we're kind of zoomed in here, so it looks rather flat at this moment. But it does slope from bottom left to upper right. And we pushed down, and we got a bounce off of the overnight low. We pushed back up, and we got this lower high, basically at opening print. The close was below opening print. You can see here that here was the previous high. So when we made this high here, locked in by going two down in this candle, obviously, that set a lower high. And then, so we did actually think that we might need to get out, but we knew that we bounced off of overnight low previously, and the last 2 days, we've seen that same type of action where we push down at the beginning of the morning and we make basically a double bottom off of the overnight low before we pushed up for the rest of the day. So knowing that we had the last 2 days, we did stay cautious. Again, we rolled when we were already green or in profit, right? So just managing profit at this point. And we did essentially get another bounce off of overnight low, right? We pushed down, we went below the overnight low, but we were able to pull back within. And the reason why we still stayed in the particular trade that we were in is because we, kept an eye on the 15-minute, and we were really just making a higher low here. And, it's really a good idea. The video that I use, in the videos, I use a single chart because it's easier for people to view, especially if they're on their phone, if I remember to zoom, make things large enough for you guys. But it's really a good idea to have multiple time frames up. I've talked about that before, and even if you only have one screen, there are ways that you can set up multiple charts. Let's see, actually, do I have mine up? Yeah, so for SOXL here, I have the 15-minute in the upper left, the 1 hour in the upper middle, the 4 hour here, the 1 day, and the 1 week. And over here I've got the internals for TQQ, right? The tick Q, vol QD, and ADQD, right? So I can keep an eye on how internals look. So along with the fact that we were just making a higher low here on the 15, right? If you look on the 15-minute, the low that we're referencing when we make the next low is over here, right down here. So when we made this low here and push back up, that's technically a higher low on the 15-minute chart. And if we look at the internals also, the tick that's like on a 1 minute because it's a fast moving, but you can see it's barely under the zero line and it's moving up. The same with the vol QD. It did push down slightly, but it's just below the zero line and pushed back up. Same with ADQD or market breadth, it was pushing back up. If we look here, the market breadth it never really went below like a 1.3 to 1 for the NASDAQ. So there was no real evidence of heavier selling at that time, right? So we did stay in the contract. Let me go back to the bigger chart so it's easier for people to see. So we did stay in and we got the bounce. We pushed back up to opening print and we thought, hey, this may be just like the past couple of days. Just instead of making an equal or higher low off of overnight low, we just made a lower high on the 5 minute at least, but it's still a higher low on the 15. And so, we held on. Now we did reject off of there and continued to push back down, but again bounced off of overnight low. So at this point we're just kind of sitting back and knowing, all right, at this point it looks like it might be a day of chop, not much trend, which is fine because the last few days we've had a great uptrend, right? So it's perfectly reasonable to think, all right, well, now we're just going to be in a sideways trending day. So even though we did bounce again off of overnight low, we went back up to opening print. So if you were a scalper and you saw this first range develop here up by 9:40 Central, 10:40 Eastern, then you might know, like, all right, this is my range, right? And so you could have waited or actually taken the put here, taken it to overnight low, sold, and then bought calls here, anticipating a push back up to overnight high. Opening print, and that's what we got, right? And that opening print again rejected, and basically, to make a long story short, towards the end of the day, once we got this lower high here on the 15. This is the 5 minute. Let me switch to the 15 so we can see that. Yeah, so this lower high here on the 15, by this point, this lower high right here on the 15, by this point, we're like, okay, we're looking for an exit. If we go below this this higher low here, because we're coming from a lower high, we'll go ahead and exit, and that's basically what we got. We exited right here. So again, the profit from yesterday plus these contracts that we swung equals out to a pretty good position that we took yesterday based off of this proven trading strategy, right? We did, to be perfectly transparent, we did enter a couple of puts here because we got the lower high, a second lower high on the 15. They were looking real good, and we stayed in them, but we did get a bounce, and we just said, whatever, we'll go ahead and swing them. It was just a couple of very light positions, so they were at the money. We finished the day just slightly green on those contracts. Looking in after hours, we look like we're pushing up, so those might be some contracts we need to sell at the beginning of the day tomorrow to cut any losses. But you can't win every single one. So as long as we if we open pushing to the highs, if internals are very bullish in the morning, we'll go ahead and get out of those. But you never know, we could get another sideways day, so we'll just have to see what overnight action and pre-market action bring us tomorrow, and then see what happens at open, right? So that's what we got from a real zoomed in view. From a 4-hour perspective, we talked about yesterday how we haven't really set a solid higher low, right? We had, or since here, right? We bounced here with the solid higher low, but we had this soft higher low and then another soft higher low here. So it was perfectly reasonable, especially with the levels we were getting to, right? This weekly broadening formation, again, this purple diagonal line, the last year's 50% level, which has been resistance to us in the past, right? Resistance, slight support, but fell back through resistance, basically resistance here as well. So it was perfectly reasonable to expect this to be a point where we could get a better pullback and a solid 2 down to better establish this 4-hour trend going higher, right? So you do want, with these straight up shots, you do want to see some pullback, right, on more than just the 4-hour time frame giving us a bullish engulfing candle, but an actual solid higher low where a level is tested, and that can give you another entry point to either add to your position or enter a new position. But it gives you that confidence that okay, we're still in this uptrend, we're making this higher low, and especially once we go 2 up, if you enter here as soon as we go 2 up, especially if we get to making a higher high, then you can have even more confidence that in that position, even though we are again running into these resistance levels. So you do want to temper your expectations, but for all intents and purposes, we're still in an uptrend. We did flip to a downtrend on the 1 hour, but you have to do that in order to put in a higher low on the 4 hour, right? So that's fine. It's no big deal there. If you just look here, high to a lower high, right? We got a downtrend on the 1 hour. So nothing to worry about there. What else was I going to say about this? Oh yeah, just continue to watch though, right? Because on the 4 hour, we haven't locked this in as a higher low. It's not like we went 2 down, 2 up, right? We went 2 down, 2 down. So it's continuing this this push down, right? We have to get a 2 up, right? We have to go above the previous candle's high to lock this in as a low. So unless we open here tomorrow in the morning and push up, we're still in that 2 down, 2 down trend kind of thing from a 4 hour until we maybe we have to push down all the way to this 100% fib of the April bull flag, right? This is been again another position of level of resistance and support. So maybe we push down, maybe we push back through and hit market makers expected move low by the end of the day, but maybe we hammer up after we hit this low, right? That could give us a better chance of going 2 up in the second 4 hour candle and locking that in still as a higher low, right? Because we still have to look at these as soft higher lows. These are just really good points where we could see an actual solid higher low get put in. So if we don't do it here, we could see this retracement back down to where the week opened up. I'm not saying tomorrow, but the following week we could continue to pull back and hit that what was this week's opening print, or basically last month's 50% level. We don't know. We'll have to see. But until we flip back into an uptrend on the 4 hour, you still want to kind of wait, especially for a more full day trade or overnight swing before you really jump into calls again, right? We can still continue to push down. On the day chart, again, we had an inside day. So we didn't breach the previous day's high or low. So not a whole lot to say on that. But look at the level we're at, that market makers expected move high. again, we talk about how that's not an end-all be-all level. The price doesn't have to reject there, but you can see sideways action there or a rejection. And that's 70% of the time the market makers are right. So again, you can go past it, but more often than not, it's going to be respected, and there's reasons for that. Mostly boils down to the open interest on the options chains, but yeah, that's why we put out those market makers expected moves at the beginning of the week and on Fridays, so that we can have those as kind of barriers to keep us in line, right? So that's what we've got from the everything up through the day chart. Let's take a look at the week and zoom out a little bit here. There we go. So again, we made this higher low here on the week, right? Again, we had that 3 weeks of pullback where we continue to say, right, just play the downside. There's nothing to worry about. We're not breaking down. We made the higher low, and now we're continuing to push back up, trying to break last year's 50% level, which is lining up with this weekly broadening formation once again, and getting back to those highs above the 50 level. Getting back into the month and quarter strat reversals of those magnitudes of 70.08, which we'll look at here. But from a week perspective, right, everything still looks very good. We have this bull flag. Here's the flag pole, and then here's the flag, and we've got our fib extensions, right? We've already that's that 100% fib extension of the April bull flag that I was talking about previously. That's right there. So want to use that as support to continue to push up, but for all intents and purposes, the week is still in an uptrend. Let's go to the month. Again, last month we did push down and make a 2 down, but managed to hammer back up decently. Didn't turn the candle back green, but we did show that the bears aren't necessarily in control. They tried to push it down, but the bulls bought it back up, and we can see by this month's price action so far, it's been nothing but bulls, even though we opened up in the middle of last month's price action. So we do want to go 2 up on the month so that we can lock this in as a higher low on the month, a solid higher low, kind of like on the week chart. There were those soft higher lows. We have the soft higher low here after this bounce on April 7th. So we do want to lock in something a little bit more solid than this. Otherwise, we do run the risk of coming back down through and breaching the bottom side of that 3 to make a solid higher low. Or at that point, it would be a lower low. But again, continue to watch out for that. And on the week, we got to continue to push up on the week to make a higher high in order for us to trigger the reversal on the month, right? On the quarter, we were able to re-trigger the 1 combo 2 down, combo 2 up. Right, we went back above this 36.15 level here, so we are back in force in that reversal, and the magnitude is up here at 70.08. So again, from the quarter perspective, the main resistance that we have out there is last year's 50% level. So just got to get through there and maintain. From like a weekly perspective, make some type of higher low above that last year's 50% level to give us that continued uptrend, and trying to see that 70.08. We talked about how it would take more than a month, and we're seeing that, right? Even with the great price action that we've had to the upside this quarter, it's going to take more than 1 quarter for it to reach the strat, that reversal strat there, right? And on the year, not a whole lot to say here. We had the 1, 2 up, 2 down to start the year, but made the higher lows as of so far. We've hammered back up. We flipped the candle green. Just trying to finish as high as we can in this candle at the end of the year to give us the best chance of going 2 up as early as possible in 2026 to trigger this 2 down, 2 up, which also has this magnitude of 70.08, just like the 1 combo 2 down, combo 2 up reversal on the quarter. Okay, so that's everything from the zoomed out view. Let's go ahead and take a look at the market maker's expected move, and to do that, we are using Thinkorswim. And we just pull up the options chain for this week, this Friday, December 5th. And if we go over to the right-hand side here, we see this plus or minus 2.156 in parentheses. That is the market maker's expected move, plus or minus $2 and we'll say 16 cents. So if we go back over to our notes here, For Friday, December 5th, there will be 17 trading days left in 2025. The close price on Thursday, December 4th was 45.16. The week, month, quarter, and year are all green. These are the levels that it would take to make each of those red. We know that the market maker's expected move for the week was plus or minus $4.18, giving us that range of 45.44 to 37.08. And we're sitting up here at this top of that expected move. But for Friday, we do have that $2.16 plus or minus expected move from the market makers. So with this close price of 45.16, that gives us a range of 47.32 and 43 flat. All right, so let's go to our charts here. Let's go to the 5-minute and let's bring up the scalp chart. All right, so we can see here. There we go. I'll bring everything into view. There we go. We've got up at the top of the chart, the market maker's expected move high, 47.32, mapped out with this dashed orange line, short dashed orange line, and the market maker's expected move low of 43 flat down here. All right. Currently, well, not currently, but the close or previous high of day, or Thursday's high of day, December 4th, is 46.10. So we've got that mapped out here as far as our 4-hour markers. Previous low of day was down here at 44.44. And then we have so far the overnight high and overnight low for SOXL at 45.76 and 45.10. Let's just say they expand. All right, say we push down a little bit more, closer to previous low of day. But then let's say we actually went higher than previous high of day in the overnight high. Just doing this for quick illustration purposes of the trading method that we use, right? So say we have this range overnight, a big range, and we open up somewhere in between that range. If we open here and we push up, say we reject off a previous high of day and we push back down, but we get a higher low at or above this opening price level, then we want to enter into calls. Our first target would be previous high of day, so not a lot of magnitude there, even if you get the best entry right off of the opening print. So you probably want to hold on to those unless you've got a whole bunch of in the money calls that you bought was short time expiration. Otherwise, you want to wait for this overnight high. You want to try and reach overnight high to either sell part of your position, half of your position, 3/4 of your position, and let things maybe run, see if we break through last year's 50% level, see if we can get up to that market maker's expected move high up here. If you want to let a couple run there, that'd be fine. But for the repeatable strategy, overnight high and previous high day and overnight high would be your targets, first target and second target. At the same time, if we open up in the middle of overnight trading, the overnight trading range, and we push down, say we push down and we bounce off of the overnight low and we push back up, but we get some type of lower high at or below the opening print level, it could be even down here. Then we want to enter into puts, first target being overnight low, second target being previous low a day. So not a lot, if we're just looking at the repeatable strategy targets, there's not a lot of magnitude. Obviously, Thursday was an inside day, so we can't expect there to be a lot of magnitude unless it was just a huge inside day, from inside of a engulfing candle or something like that from the previous day. So no, not a lot to look for as far as magnitude. So you may want to, load up on a couple more contracts. Maybe if you buy at the money, maybe buy in the money, maybe give yourself a little bit better chance of making a little bit more profit. But the main thing is to wait for the triggers, right? Follow the rules. If you stick to the rules, then it's a very good strategy. Yes, you do take a loss from time to time, but if you have good stops, then you take minimal losses, if losses at all. If you're not stopping out even. So watch how things open tomorrow, and maybe you get a jump on something. All right, now for the more intraday trade, we'll look at the 4-hour chart here, and we can see what we talked about yesterday, how we finished the day with that 3-2 up, and we warned that we could trigger a 3-2 up, 2 down. Well, that's what happened. We got the 3 2 up, 2 down. Wasn't a very convincing 2 down for that first 4-hour candle. Frankly, the second one wasn't either, but it was a second 2 down, continuing that push to the downside and establishing that 1-hour downtrend. So again, we did finish in this hammer candle. Well, it's hammerish and it's not green, so it's not bullish. I'm not saying this is a bullish candle, but we did finish it with basically a hammer on the second 4-hour candle of Thursday. So we do have a good chance, especially with the price pushing up overnight, a good chance of going 2 up tomorrow in the first 4-hour candle, locking this in as a higher low on the 4-hour chart and just continuing the 4-hour trend to the upside. Now again, we got to bring into focus the last year's 50% level, the weekly broadening formation, and the market maker's expected move high, all converging right here. So it would be reasonable to expect that even if we do get a push up, that we should see some resistance here. And if we don't totally reject, we could see more sideways action, right? I'm not saying that we're going to reject and we can't push through. If we get momentum, if there's some type of catalyst, we could easily just push through there. But if it's just a normal day, no real catalyst or anything like that, just organic price action, that's just what I would expect to see, is a push up to about this level and then flatten out. I mean, it's a Friday anyway. This is one of the reasons why we don't even really trade very heavy on Fridays, is because a lot of times, it's one move, not necessarily saying it's in the morning, but one move closer to the morning time, you get in, you get out, and then people are going home. They're not trying to do too much more day trading. So I'm not saying it doesn't happen. You can't catch a Friday afternoon day trade, scalp or something like that. That definitely happens. But just looking for consistency, that's what I particularly look at. If we do get price action to the downside, right, that's just continuing this 3 2 up combo 2 down. So the magnitude of that move is the low of this 3. Kind of funny how the market maker's expected move low lines up with that, right? So the strat, it does work, right? Just saying. But if we get more price action to the downside, look to finish out that 3 2 up combo 2 down strat reversal down around this 43 level. On the day, let's get to a cleaner chart here. Oops, don't want to broadening formations. There we go. On the day, did we forget to put the market maker's expected move high? We did. Did we? Oops, that's not the chart we want. Yeah, 47.32. Let's get that on there real quick. Duplicate. Make this 47.32. Oh, come on. Let's type. There we go. All right, so on the day chart, just wanted to make sure we had our market maker's expected move high and low out there for us. Right? Again, we had that inside day following all these 2 ups. So it's perfectly reasonable that we could see a 2 down tomorrow. I see we are pushing up right now, but who knows where we are by the open tomorrow. If we push down and breach Thursday's low, that could just also be setting us up for a higher low on the day chart. And one of my favorite reversals is the 1 2 down 2 up. So if we push down and breach Thursday's low, obviously triggering that 2 down, maybe we stop at this 43. Maybe we push down through it, but then hammer back up and close around there. Who knows? But we want to watch how the Friday candle closes, because we could be being set up for a 1 2 down 2 up reversal. Magnitude being obviously the high of the candle to the left of the 1, which again coincides with last year's 50% level, and again that resistance that we're gonna have to try and break through. Let's go to the notes just to look at the hard numbers, right? We talked about the market maker's expected move. We always keep our gaps above and below charted out as well. We talked about on this scalping chart, we're looking for higher lows at or above opening print to get into calls, lower highs at or below opening print to get into puts. And from a 4-hour perspective, if we push to the downside in that first 4-hour candle tomorrow or on Friday, depending on when you're watching this video, if we go below that 44 level, that will trigger the 3 2 up to combo 2 down. Target being 43.80 just because we are in an uptrend, but the full magnitude of that move is 43.15. If we do continue to push down past that 43.15 level, we're looking at that 43 flat level as the extended target. That is the low for the market maker's expected move. If we push to the upside in that first 4-hour candle tomorrow, we trigger a 2 down, 2 up at 45.83. Magnitude for that move is 46.10, right? Again, so not a lot of magnitude there. And if we push above 46.10, that actually triggers a combo 2 down, 2 up. And the magnitude for that move is 46.68. All right, so that's how we're looking at it from a 4-hour chart. If you're looking at the day chart, if we breach Thursday's low, again, 44.44, that triggers a 2-1, 2 down. Magnitude of that move is 43.15. If we push down past that, we do have an extended target of 203. If we go to the upside tomorrow, if the day chart goes 2 up, that triggers at 46.10, triggering a 2-1, 2 up. Magnitude of 46.68. And we've got extended targets of 47.97 and 48.43 for you. All right, we'll keep from going back to the charts on the week, month, quarter, and year. On the week, we are in a 2 up continuation. We are above this 41.33. We just need to try and continue to push up and close as high as we can into the end of the day, or if we can. Get a strong close for the week and hope we get another 2 up continuation next week. If we were to make a bearish engulfing candle, we would have to get down to 32.05. I don't think that's going to happen tomorrow, so won't really even talk about that. But on the month, we are getting closer to that 5019 trigger, but we are inside on the month still. So there still is a possibility of going 2 up, combo 2 down. If we go back and breach 28.12, magnitude for that move is 23.80. But again, we are in an uptrend on the week and month, so we've got some intermediate targets there because I think we really need some type of catalyst to really reach the magnitude of that move. Now to the upside, if we get that 5019 level, that triggers the 2 down, 2 up, so we get a reversal pattern there, but it doesn't have very much magnitude, just that 5076. But if we are able to break through last year's 50% level and above that 5076 level, we've got some extended targets out here for us as well. On the quarter, we've talked about how we triggered the 1 combo 2 down, combo 2 up after completing this 2 down, combo 2 up reversal that triggered at the magnitude of this 2 down, combo 2 up, 36.15. So as long as we're above 36.15, then we're still in this 1 combo 2 down, combo 2 up. Ultimate magnitude for that is 70.08. And on the year, we talked about we triggered the 1 2 up, 2 down, but reversed that, right? Making a higher low, hammering back up on the candle, and very solid green candle at this point, green hammer candle at this point. So just trying to finish at the top of those at the top of the chart candle there. So that's what we have for you guys, the triggers and targets for everything from a scalping perspective all the way up through the 1-year chart. Try to jam in as much information as possible without taking up too much of your time. If you enjoyed this video, go ahead and give us a thumbs up. Again, it really helps the channel grow. It's a free thumbs up. We don't charge anything for the channel, so free thumbs up from you guys really goes a long way. And if you haven't subscribed already, make sure you subscribe. That way you're notified when we release new videos. We'll go ahead and end the video like we normally do. If you are watching this Thursday night, we hope you get some good rest tonight. Wake up refreshed tomorrow, ready to trade. If you're watching this Friday morning, we hope you got some good rest last night and feeling refreshed this morning. And we look forward to getting out there and trading with you.